Hi there. Welcome to the YouTube channel of My Financial Shape, the blog where I document our journey towards financial independence by the end of 2024. Today's video is about the flip side of high yield stocks. First, the disclaimer. We are simply outlining our thoughts based on public available information, and we are holding shares in the company and therefore might be biased. Historic data is no guarantee that they might apply to the future. Circumstances may change. The views are subject to change. You're responsible to do your own research and due diligence. Our video is in no circumstance to be regarded as investment advice or as a recommendation to invest. We exclude any liability. So in this video I want to show you my cash returns from 2009 to 2021, which I received from two of my very early holdings, Deutsche Telekom and Nestlé. So in 2009, marking the beginning of my path as a dividend growth investor, I invested, amongst others, in these two positions in the amount of each 5,000 Swiss francs. So 1 Swiss francs corresponds to roughly 1.1 US dollar or 0.8 euro. When I made my stock acquisitions in 2009, respectively 2010, the dividend yields of Deutsche Telekom was above 6.7%, whereas Nestlé's was more modest and significantly below 3%. Since 2010, Deutsche Telekom has paid me back around 3,000 Swiss francs, or almost 61% of my initial investment. So as of today, the stock price stands above 17 euro, which implies a book gain of more than 80%. So my engagement in Deutsche Telekom has been pretty rewarding so far. Even more if you take into account the strong depreciation of the euro against the Swiss francs. So in 2009, the Swiss francs euro exchange rate stood at 1.5, and today it's lower. It stands at around 1.08. My total return, so the collected dividends plus book gains, are over 140% of the initially invested amount of 5,000 Swiss francs. Nestlé's dividend returns were handsome as well. So far, I have received around 2,600 Swiss francs in cash, which represents 52.2% of my initial investment. So Nestlé's share price has more than tripled in the last years, and my total returns on my Nestlé position is north of 350%. So 10,000 Swiss francs invested back in 2009 and 2010 returned 5,600 Swiss francs in cash dividends, and in terms of book gains, it has been very handsome with regards to a quite substantial capital increase. So when you look at the graph showing my yields on cost with regard to Deutsche Telekom and Nestlé, it is pretty clear that both companies have completely different dividend policies, and patterns. Nestlé has consistently increased its dividends since 1986, and from 2009 to 2021, my yield on cost slowly climbed from 2.3% to 5.6%. So these numbers are always net after taxes and after fees, so always net amounts. From 2016 and 2017, you can see a pretty strong jump of my yield on cost of my Nestle position. This is due to the fact that the country where I live entered into a double taxation treaty with Switzerland, and I have since then had the possibility to get refunds or repayments of a part of the withholding taxes. So instead of 35%, the withholding tax burden was lowered to 15%. Let's have a look at Deutsche Telekom, which in contrast to Nestle shows a much less consistent dividend history, going back just to 1996. And there were several dividend cuts in the past. From 2009 to 2015, my yield on cost fell quite significantly from 6.7% to around 3.5% in 2015, and it has been climbing then later on. So without the depreciation of the euro against the Swiss franc, the decrease would have been less dramatic. And nevertheless, my yield on cost has been moving downwards compared to Nestle. In 2021, it's lower than Nestle's yield on cost. But since 2015, Deutsche Telekom has also hiked its dividend in line with the development of the free cash flow of the company. So cash generation seems to be robust, and it has also been expanding in the last few years. But of course, telecommunication business requires huge capital expenditure, investment in networks and so on, and regulation, especially in the European telecommunication market, and also tough competition put enormous pressure on margins. So free cash flow of Deutsche Telekom will certainly not be as predictable and stable as it is with a consumer staple giant like Nestle. And I wouldn't be too surprised if my yield on cost with regard to Deutsche Telekom settled in a range between 3.5 and 4% in the medium and long run. So Nestle, in contrast, will have a higher yield on cost. It already has a higher yield on cost, above 5.5, and it's quite likely to increase even further. So some considerations on high yield stocks. At the beginning of my path as a dividend growth investor, I was particularly attracted by stocks with high dividend yields. So investing in Deutsche Telekom seemed at that time as a no-brainer, and it can be considered as acquiring a good company at a very good price. But of course, Nestle is another quality business. So there's a huge quality difference between the two companies. So investing in high yield stocks can be very rewarding, but only under the condition that the purchase price makes sense and there is sufficient margin of safety, and the company is particularly well positioned with a broad economic mode. And it's important that the business in fundamentals and cash generation remain intact for the foreseeable future. So if these criteria are not met, I would certainly not invest in that company today, as it poses the risk of tapping into a value trap. So high yield stocks certainly are not invest and forget um, um, holdings. It's not like participating in Johnson and Johnson, Hershey, Unilever, or JM, Smucker, or Disney, or PepsiCo, or Nestle. These companies are of a different quality and solidity and much reliable with regard to cash generation in the long term. So there's of course a flip side with regards to high yield stocks. It has always to be considered as a higher risk uh, position. As you can see in this example, over the last 12 years, my returns on Deutsche Telekom, which is a classic high yield stock, have been quite remarkable, quite satisfying. But of course, I expect in the next 10 years that my Nestle returns will by far exceed these high yield returns. So with that being said, thanks for watching. Please don't forget to like and smash the like button and subscribe if you liked this video. And thank you again very much for watching, and bye bye.